Welcome to the Tote podcast hosted by Jim Rhodes, founder and head coach at the Octane Group. Join us while we dive into the questions that matter most to buy here, pay here operators in the world of subprime auto finance. This episode is brought to you by our friends at Neo. And now, here's your host, Jim Rhodes.
Hello, everyone, and welcome to another episode of the Tote the Note podcast. We're lucky enough to have with us today Brent Carmichael from NCM. Brent continues to join us in this series we're calling The Hardest Questions in Buy Here, Pay Here. And in addition to Brent with NCM, we've got Naveen Bastija. Is that how I pronounce your last name?
Bastija, yeah.
Bastija, but so we're happy to have you here, Naveen. And so Naveen is with Neo, an underwriting product out of California, and he is one of the thought leaders out there for sure when it comes to artificial intelligence, or what we often hear abbreviated as AI. And so we're happy to have Naveen here today as we talk about what I decided to call, when we think about the hard questions, this particular subject, we probably could have used several different questions here, but I'm kind of thinking of what does or what should AI mean to the average buy here, pay here dealer? And I'm also thinking about that in the context of what can it mean for the value of their business. So as we dive into that subject, I just want to make sure that, our listeners need to understand for today's episode, I'm going to move pretty slowly because there's some pretty deep technical stuff that we want to dig into here. And so, again, I'm going to move kind of slowly because even though I'm a numbers guy, a lot of this is new territory, and we're certainly learning new things as we spend time with Neo. We've got some clients out there with Neo. And so as we've observed kind of what's happening inside those operations, it's clear that there are some important lessons to be learned. So again, welcome, Naveen. We're happy to have you here today.
Thanks so much, Jim. Thanks for having me.
Of course. So Brent, any questions of Naveen before we lead in with some of mine?
No, not at all. Just good to see him again. Hadn't got to see him in a while, and look forward to, he's actually going to be at one of my 20 group meetings coming up later on this month. So looking forward to getting to spend a little more quality time with him.
Same here.
Yeah. And I know you also know Naveen through 20 groups and through some of our mutual clients that are using Neo as their underwriting tool. And it's also a CRM, I should mention, that you have that solution on the front end of that product. But for today, I really just wanted to talk about the data. Naveen, you're a numbers guy, and I used to think I was a numbers guy until I met Naveen. Now I realize he's out there dealing with the big numbers and the highly sophisticated artificial intelligence that we talk about. And it's kind of it's a nebulous subject. I think most of us see what's happening in technology, and we recognize there's a shift, and we all see what's happening in the digital environment. And I'm trying to make sure for our audience today that we dig into what it really means for buy here, pay here. I feel like we've seen that out there at the larger, the banking level, the finance industry for a decade or more. Now we're starting to see that move into deep subprime. So Naveen, you might just share with our audience kind of your background and how you came to identify deep subprime as a place where you needed to bring data.
Sure. Well, really my background was building technology solutions for banks and lending institutions. They were like the early adopters of technologies like this. Like even starting with scorecards, they were the first adopters. And then as they started finding more relevance in data, they started using more sophisticated mechanisms to make sense of that data. So when I wanted to do my own company, I kind of gravitated towards what my expertise was, which is building such solutions. And through luck, as you may have it, ended up in Buy Here, Pay Here, where that was one of the first dealerships I was introduced to as a customer, and then rest is history. Found that data-based decisions in Buy Here, Pay Here are extremely important. These are deep subprime customers who are legitimately looking for a vehicle to get to their job and live their lives. But a lot of times there are things that the dealer does that's wrong by the customer. There are a lot of times the customer does that's wrong by the dealer. The idea was to look at the data and figure out how to make the best of the two. When you get the right customer in the right vehicle and it makes profit for the dealer, everybody wins.
Right. And so that kind of comes from, I know Brent and I come from a background where, we were out there probably more than spitballing, but we were, using unsophisticated checklists to try to make, underwriting decisions in the 90s and 2000s. And so now as we see that shift and the opportunity to really dig in and get more data, you remind me as you go through that there's the customer and the profile of the customer from a credit perspective. Then there's the deal, and those things have to fit, which is really, on the dealer side, how they structure the deal. And so, I think for starters, we might recognize, there's been credit scoring out there for a long time to grade the customer. But within that, we know that by credit scoring, we know this customer is a high risk customer just based on their credit profile. Now the question is, what can we learn within that on the customer side that might be more predictive? What are you seeing?
So are you talking just purely on a customer basis, or
Let's
also
talk about that one first. Yeah.
Yeah, on the customer side, it's really measuring intent. It's an industry where customers have had repos in the past. Now, that repo may have been their fault. That repo may have been they were truly wanting to default versus life came in their way. Or it may have been that the vehicle that they had was not, the collateral wasn't good. So with the customer data is really trying to figure out, are you a customer who's willing to make payments?
Right.
Are you showing the right patterns in your life right now? Because you may have fallen behind a few years ago because a medical emergency or something else happened. Are you showing the right patterns right now that you're willing to pay for the next 2, 3, 4 years?
Yeah, and that reminds me, Brent, I'm sure you've seen it, that one of the things we see in Neo as a product is they have the ability, one of their integrations allows them to verify customers' income electronically instead of just counting on the customer's, promise or maybe even a wrinkled up pay stub. We've got some actual ability to link to their banking for those that have, that banking capability and can grant us access. You're able to go in and digitally determine their income.
That's right. Yeah. Directly from their bank account, going back 2 years. Income and expenses. Yeah.
Yeah. So now we've got that element on the customer side. So maybe now let's move to the deal side. Like, what are you seeing? If I assume that my customers are all the same, they all have the same qualifications, credit circumstances, whatever, what are you seeing on the deal structure side that is maybe what stories are you getting from the data so far?
A lot of stories really come from, are you structuring the right deal and monthly payment and term based on the collateral and the customer, to be quite frank. What dealers don't realize it, a lot of them will have policies like, I want 10% down of a sale price. But in the past, they would have had customers that squeezed out deals that were less than 10% of the sale price. Some they would have asked for 15%. Now we know how all of those deals perform in relation to specific customer information. So you can actually leverage that going forward. For deals for customers that are scoring better, you could actually go down to even 5% down and see them perform well. So it kind of gives them an ability to structure the deal best based on everything they've done in the past. It's almost like they made all these bets in the past, and now the data can guide you going forward.
Okay. So you're talking about the dealer's historical data.
That's right. Yeah.
Okay. So Brent, what do you see? A lot of numbers out there. You're seeing composites from dealers from all over the country. Are you seeing anything in particular that kind of relates to this discussion? I mean, any patterns?
Well, the key that, again, our data has shown is really the ability to pay seems to be probably the most important factor when it comes to the overall structure period. And Naveen knows this, our biggest challenge we know moving forward now is obviously the cost of vehicles. And yes, in the perfect world, we would love to only have Naveen on a 36-month term at $400, but I may not have that car in inventory right now. And now we're going to have to kind of step out of some of these great products that we have and go, okay, now we're going to have to, and we don't have a history with this. We have a history with a $6,000 car at 36 months at $400 down and X down payment. Now we're talking an $8,000 car at 42 months at 450, 465, or 475. So it's going to be very interesting, I think, in the coming months for sure. But ability to pay has again, our data shows it is really the key factor. As long as you can keep that within a range, their chance of success is greater. Obviously, it's not going to guarantee success for all of them, as we know, because of the customer that we're dealing with. There's really no guarantee of success, let's say, for them, that they're going to make all their payments on time or pay to term. But that seems to be the one that dealers are focused on now more than anything else. It's not job time, it's not residence time, it is verifiable income that I can base my payment off of. And so again, having a product out there like a Neo that can automatically, in some cases, not in all cases, we wish you could, Naveen, wish we could get proof of income from everybody, no matter where they work, no matter how they get paid. We wish you had that from you, as opposed to the 17 different websites you get fake pay stubs from. But that's the one that I think that everybody is keying on right now, is that ability to pay. And again, there's even been some regulatory comments on that, something that regulators are going to be looking at to ensure that when we do structure a deal for a customer, that it is affordable for them. So again, I think that's the biggest thing moving forward right now, is the ability to pay.
And Brent, you bring up a great point. Like now, where we are seeing the rising inventory cost, which basically means the customer at the end of the day is going to make more payments per month. How do you decide what term to use?
Right.
Well, this is where the dealer's data can guide it, because just a month ago, I did scenario analysis based on a dealer's data who does 36-month terms to actually show them that for a specific segment of their customers, they can go up to 42. It didn't mean everybody got 42, but it was completely based on their data and past performance. It showed them that on an average, their term would go from 36 to 39, and they would reduce payments by $20 to $30 for the customers. But the scenario also showed that in longer term, they actually tend to gain $1,500 more per deal. So yeah.
Naveen, you've been around long enough. You know that term for most buy here, pay here dealers is right here anyway, right? It's between the years. I can remember, and I know Jim can too, because unfortunately him and I have been around for way too many years in this. We're never going to go over 24 months. Okay, I'll never do a deal over 30 months. No, these customers won't pay for a car for 36 months, right? And again, it's always been here. It's not necessarily the customer. It's been our limited mind that says this customer just won't perform at X. Mm-hmm. And to your point, we know they will. It's just a question of, can we, get past kind of our own bias and just go, hey, so it's 42 months. Right? 42 is the new 24 from back in Jim and I's younger days. I mean, that's pretty much what it is. But again, those were $3,000 cars at $2,400. So yeah, if you kind of multiply it out, it works.
And the beauty of that is that it's in their data, right? So we use a dealer's data to show them this. It's not some other dealer's data, it's their data. And it shows that it is going to perform. So it's usually an easier sell then to show them that they should make these changes, especially given the challenging environment we are in right now.
Good. But their fear, Naveen, is this: I make the decision today, but I don't know if it's a good decision for how long, right? I mean, that's our problem as a dealer. Is if I could, any other business, if I make the decision today, I know tomorrow or next week whether or not it was a good decision. I make that decision today, it could be 12 months, 15 months, 18 months before I know if it was a good or bad decision. And by then, you've probably heard the analogy of, if I get a $10 million portfolio going a certain direction, you can't turn it that quick, right? I mean, if it's all built in and these things start to, to default at a higher rate, I'm down that path for $10 million. So I think that's part of the fear, and hopefully where AI technology can help them just go, look, the numbers say this, and that over time, this will perform at this level or above this level, and it'll help them kind of come off the reins a little bit. But like I said, I was the same way. I was scared. I mean, if I make it today, that guy falls 6-8 months from now, it's too late. I can't do anything about it. So
the funny story there is I started doing this for buy here, pay here 8 years ago. And I sold the concept to 2 dealers in the first year and a half, right? In the first, like when I started 2 dealers, I really was with 2 dealers for a year and a half before I was able to bring on other customers, or other customers would trust it. And believe me, for that year and a half, I was on pins and needles. I was like, right? I was like, if my predictions and my scenarios and my data thing goes bad, I'm out of business, right? 8 years later, fingers crossed, still in business, and it has nothing to do with fingers crossed. It's about following a discipline and a methodology and letting the data guide you. And now I consistently have dealers tell me that they waited too long to adopt the system. That they waited 2 years
Yeah.
to see what the results are, only to find out that the results are exactly the way the data predicts it. And then they go like, I wasted 2 years. So yes, there is a leap of faith, but the technology has proven with big banks, lending institutions, heck, Capital One uses it, Westlake uses it. It's the same technology being provided to buy here, pay here, to level the field. I mean,
Very nice.
that's what it is.
So, in the interest of full disclosure, Neo's our sponsor for the Tote the Note podcast. So I want to make sure and get that out there, for those that are listening. But it's not my job to sell Neo. We're certainly fans of what they do, and we're seeing some really bright dealers, go through the full demo, make the decision to use Neo. And, we're going to see, I think, that those dealers are going to learn from their own data. I think they've got a chance to have more value in their business because now at least they've got some system with some history that they can lean on. And, if in the event that they did want to move into a succession or sell their business, I think having something as sophisticated as that at the center of even a fairly small business, some of these dealerships are small but growing quickly. And so I think it's worth mentioning that that's among the factors. I want to get back, and I can already tell, gentlemen, we're going to need to do more than one episode on this subject because I've got a couple of things I want to ask, and we're not going to get to it. I don't want to expect our listeners to hang in too long, but I want to go back to this subject of ability to pay. So, I heard Brent kind of describe, what he would maybe characterize, but Naveen, what are you measuring when you look at ability to pay? What are you looking at?
Uh, from like purely ability perspective, it's usually like the PTI. You don't want to be going beyond 25% net income. Now,
Okay.
don't get me wrong. There are deals we find in their data that on specific low income customers, you can go up to 30%.
Okay.
Okay. That doesn't mean that's your business. So
Right.
you want to be below 25%. And what I coach dealers is that once you have, the idea is the second the customer does an application, you instantly understand what they can afford, how they score, and chase your better scoring customers first. Because if you do that, you're not going to be struggling with, I have someone who makes 1,500, 1,800 income, and I need to do a deal with them this week or
Right.
this month. So
Sure.
the more you focus on instantly figuring out what your better scoring customers are, you're not going to be digging into 25 to 30% PTI anyway.
Okay, so I want to make sure and explain for our listeners when we talk about PTI, we're talking about payment to income, and you're really talking about the gross payment. I'm going to guess not just the installment. You're talking about the gross payment, which in some states would include sales tax or whatever you're financing in the transaction. You've got a payment that's been negotiated with a customer, and you're looking at that relative to their net income. Am I right?
That's right. So you should also include like CPI payment. I mean, at the end of the day, the customer's paying for that.
Right.
Yeah.
Okay. So that's why we want to kind of break that down. So you're saying a PTI of 25%, you don't want to see that payment be any more than about 25%. And that's been my experience as well. So that's kind of what we're looking at. And then one kind of subject that I'd love to take on here, but this may stretch into a much bigger subject because I have to kind of prepare our listeners for those that are, out of the generation that Brent and I come from. We've been hearing dealers talk anecdotally, conferences, 20 groups, auction lanes. They're talking about what it means and how an established dealer would mentor a new dealer. And of course, that's based on a lot of information that's, based on my own experience, maybe as a dealer. One of the more interesting things that I learned, and I'm a numbers guy again, when I was running numbers, I came across your explanation about down payment and what down payment can and cannot tell us in buy here, pay here. So again, I think it's a whole big separate episode, but you want to just kind of share with me kind of what your data has revealed about what down payment does and does not mean?
Sure. I mean, yeah, we all know that in general, it's understood, on a big chunk of buy here, pay here's believe that down payment doesn't matter. That sometimes you may be asking too much down and putting the customer in a hole, and that would lead to the default. But in reality, for every dealer that I've analyzed or my team has analyzed, down payment always matters. it actually tends to have a significance that's within a very narrow range. Like each dealer operates differently. So obviously how important down payment is not going to be the same, but it's usually within like a narrow range of significance. It has the same weight, but at the same time, it also tends to be an accelerator. Usually customers, the more down you get, they remember that and they then make more payments, crucially in the first 12 to 18 months when you want them to make payments. That takes you over the hump to become profitable. So they may not last the term, but they still generate a profit for you. Now,
Sure.
beyond that, it's not just about asking more down. It's about structuring the right down payment for the customer on a vehicle based on the risk and based on what you have done in the past. So for stronger customers, usually the data says get less down.
Okay.
Okay, because you can still be competitive with the Capital Ones and the Westlakes by getting less down and still having more profit down the line.
Yeah. We could have just lost about half of our listeners when you said that. I just think Brent's laughing because he knows that scares people who are old school, you know. And so Brent, jump in there. I have a couple.
Well, and again, I mean, he made a couple of very valid points that, again, our data kind of shows the same thing. Severity of the charge off down payment definitely has a direct effect over the severity of the charge off. Where we all know that it really doesn't is frequency, right? I mean, we know that still to this day, the highest charge off months of the year are February and now March, because that is the highest dollar down payment. Again, then you get into the whole discussion of it's found money, it's not real. And like I said, Naveen knows this, you know, I would rather have $500 out of somebody's paycheck when they're showing me a $700 paycheck as a down payment than a $4,000 of a $10,000 tax return down payment, because that $500 means more. And to Naveen's point, they're going to be more invested when it's 500 of 700 that they're giving me to try to make sure that they continue, or to the best of their ability, make their payments. And again, I still get stoned, I guess, to a certain extent to this day when I tell dealers in a meeting room, we know that down payment has no effect over the frequency or the performance of that deal. Not saying don't get it, obviously ask, but I would never lose a deal over down payment because I know I can structure a payment and a term that's going to overcome that in a lot of cases, to Naveen's point, to the right customer.
Right.
You know, the $9 an hour guy or something, you know, short job, you know, those are not the ones that we want to take that lower down and stretch that term on. That better, stronger, more historically stable customer is the one that we'll want to do that on. And again, it's nice to hear that from Naveen, that he's getting the same data that we've been seeing at NCM now for the 15 years that I've been here. Share information with Ken at Subprime Analytics, share some data with Agora, which does a bunch of note buying and everything. And again, it's kind of good to get some validation from another respected vendor in the industry that we're all kind of on the same page, and that it's not the end all be all. But again, for the newer dealers out there, yes, as much down payment as possible, as less cash on the street as possible, as less risk. Obviously, that's probably the way you want to get your toes in the water of this business, is not zero down out of the block. We probably want to get $1,000, $1,500 down, reduce my risk till I get comfortable with my portfolio, how it's performing, and get a better feel for it. So I'm gonna be Switzerland. I'm gonna say yes, get as much money down as humanly possible, but no, I'm not gonna lose a deal for it because I don't want to alienate anybody that's out there listening right now.
And Brent, you brought up a great point. It's a balance between how much down payment do you want to get to have the right risk in the deal, but at the same time not losing the deal. Mm-hmm. This is where the dealer's data can guide them based on the customer profile and the past deals they have done to a customer like that, which tends to be all over the place, by the way. Yeah. Just like you said, they don't follow consistent policies. Some months are fast and they want more down. Other months are slow, and then customers get deals with less down. Now, all that's in your data. So now the data can come back and tell you on each application exactly how much down payment to get to have the right risk, including during tax time. It adjusts for that. It understands that tax time is free money, and there's a discount that can be applied to that a $700 down in tax time is really more like $425 for my business based on where I am.
So I might just add that, Michelle and I work a lot with startups, dealers that are new, and obviously they're in an intense phase of their business where cash management is critical. So there's the loan performance side of this, and then there's the cash management part, which we all understand down payment is, important in making judgments about, what can I afford? How many deals can I afford to do with 500 down or 800 down, whatever that number looks like. But I want to say, before there was Neo, I remember meeting dealers that say, we kind of try to look past the down payment. We look at the customer profile and whatever other factors they look at. And I remember thinking, well, that's easy to say when you're an established dealer and you can afford, from a cash management standpoint, to look past the down payment. But I think what I'm hearing you say is that the data suggests that we need to get comfortable with the idea that down payment is not the predictor that we have kind of been led to believe that it is. And if we can get comfortable with that, then we can do our business planning accordingly. As we kind of step into business, we can build our model accordingly and be adaptive, because that's going to let us do volume, right? That's going to let us serve the customer who does show to do quite well at $800 down. We take that risk. It's at least more predictive than the things we've been using. So, that's why we can't be afraid of this technology. And I think it's a better tool than what we've had. And I just think it's important for dealers to get introduced to this and get comfortable with this whole concept of, artificial intelligence and what the data can really mean as we compile this data. So it's probably a good place for us to wrap up. Naveen, I look forward to having you back, and we can dig into that, because I've got a whole other subject, streams of thought around that subject that I look forward to sharing with the audience, because I know you're deep into that stuff as much as anyone we know. And so it's been a pleasure having you on. And Brent, thanks again for joining and adding your experience to the conversation. So, until next time, folks, we'll wrap up there, and we invite you to probably find a future episode with Naveen on our YouTube channel. You want to subscribe over there and find us that way. And by the way, we're also getting now syndicated out there on Apple, iTunes, Spotify, and Google Podcasts. You'll be able to find us that way as well. So definitely can find us on your drive to the auction. And in the meantime, we appreciate you folks tuning in.
Thanks for joining us. Please leave a review, and don't forget to subscribe to Tote the Note. And thanks again to our sponsor, Neo. Find them at neoverify.com. Until next time.